Good afternoon, this is Jonathan Satovsky of Satovsky Asset Management, October 19th, 2017. And today we're on the 30th anniversary of the stock market crash, and there's a lot of headlines around that moment in history. And I wanted to use this opportunity to talk about the financial markets, which I love espousing about, and highlight something interesting about market averages and the headlines. There used to be a commentary in the Wall Street Journal about how dart-throwing monkeys would outperform these professional investors on a routine basis. And this is a visual depiction of the U.S. stocks in the market by market capitalization. And as you can see, the vast majority of attention is focused on a handful of names. You can see the top three on the large growth side are Amazon, Microsoft, Apple. Everybody knows those companies, and it's part of our culture every day. But what's fascinating to me is the reason the dart-throwing monkeys generally outperform is a combination of factors, which I'll point out as follows. 70% of the money in the world is invested in the top 4% of publicly traded companies. So if there's 40,000 publicly traded companies approximately in the world, that's a very small fraction that most of the attention, most of the headlines, most of people's energy is focused on. But the truth of the matter is that academic evidence has proven over time the vast majority of wealth in the world has been created from small companies becoming large and having room to grow. And if 96% of the companies are small, it also is indicative of the health and well-being of the vast majority of businesses and consumers around the world who are their life savings and their stakes might be in their small businesses. So if I show you a visual graph of the US stocks, for example, just equal weighted, what you'll see is how many more companies are represented by this equal weighting. And then obviously Amazon and Microsoft and Apple end up illustrating much lower exposure in the aggregate in the picture. So it's not a conversation of am I outperforming the S&P? If you are invested in small value companies, over time you very well may, over a 10, 20-year period of time, but you're not going to at every moment in time. And certainly, this last quarter is an example just showing you the global results where you see emerging markets outperformed every other market in the world. And in fact, small companies around the world outperformed in the US and developing markets. The only places small companies underperformed this past quarter is in emerging markets. So, there's a rotation, a flip-flop of behavior, and you certainly don't want to be chasing what's working the last quarter. But it's a reminder that, in essence, as I have friends that have been fortunate to have businesses that are small that have been sold and merged into bigger companies, and they're seeking to get bigger and bigger, the vast majority of the wealth that they're creating in their lives comes from that leap from small to large. So with that, I want to wish everyone a wonderful October and a wonderful holiday. Happy Halloween.